The first true stock market bubble and burst took place in the Netherlands in the 1630s and becomes a true lesson in morality and greed. Don't forget to subscribe and hit that like button if you enjoyed the content that you're about to watch. And ring the bell and you'll be sure to get notified for the next episode of The History Buff. The Dutch tulip bulb market bubble, also known as Tulipmania, was one of the most famous market bubbles and crashes of all time. It occurred in Holland during the early mid-1600s when speculation drove the value of tulip bulbs to the extremes. At the height of the market, the rarest tulip bulbs traded for as much as 6 times the average person's annual salary. History of the Dutch tulip bulb market's bubble serves as a parable for the pitfalls that excessive greed and speculation can lead to. Tulips first arrived in Western Europe in the late 1500s, and being an import from their native Turkey, they commanded some exoticism that spices and oriental rugs did. It looked like no other flower native to the continent. It's no surprise then that tulips became a luxury item destined to the gardens of the affluent, the mercantile class of the Dutch society, which didn't exist in such a developed form. They sought to emulate the wealthier neighbors and too demanded tulips. Initially, it was the status item that was purchased for the very reason that it was expensive. But at the same time, tulips were known to be notoriously fragile. It can be scarcely transplanted or even kept alive without careful cultivation. In the early 1600s, professional cultivators of tulips began to refine techniques to grow and produce flowers locally, establishing a flourishing business sector that has persisted to this day. The Dutch learned that tulips could grow from seeds or buds that grew on the mother bulb. A bulb that grew from a seed would take 7 to 12 years before flowering, but a bulb itself could flower the very next year. Broken bulbs were a type of tulip with a striped multicolored pattern rather than a single solid color, which evolved from a mosaic virus strain. This variation was a catalyst, causing a growing demand for rare, broken bulb tulips, which is what ultimately led to the high market price. In 1634, Tulipmania swept through Holland. Quote, "The rage among the Dutch to possess tulip bulbs was so great that the ordinary industry in the country was neglected, and the population, even to its lowest dregs, embarked in the tulip trade. A single bulb could be worth as much as 4,000 or even 5,000 florins. Since the 1630s, florins were gold coins of uncertain weight and quality that is hard to make an accurate estimate of in today's value in dollars. A florin then becomes about $150. That means that the best of the tulip cost upwards of $750,000 in today's money. Normally, they would go for about $50,000 to $150,000. But by 1636, the demand of the tulip trade was so large that regular places for their sale were established in the stock exchange of Amsterdam, and Rotterdam, and Haarlem, and in other towns. At that time, the professional traders, or stock jobbers, got into the action, and everybody appeared to be making money simply by possessing some of these rare bulbs. Indeed, it seemed at the time that the price could only go up, that the passion for tulips would last forever. People began buying tulips with leverage to buy more than they could afford. But as quickly as that began, the confidence was dashed. Prices began to fall, and fall abruptly. A large part of this rapid decline was driven by the fact that people had purchased bulbs on credit, hoping to repay their loans when they sold their bulbs for a profit. But once the prices started their decline, holders were forced to liquidate, to sell their bulbs at any price, and declare bankruptcy in the process. Hundreds who in a few months previously had begun to doubt there was any such thing as poverty in the land suddenly found themselves the possessors of a few bulbs which nobody would buy. Even prices 1/4 of what they paid. And by 1637, the bubble had burst. Buyers announced they could not pay high prices previously agreed upon for bulbs, and the market fell apart. While it was not a devastating occurrence for the nation's economy, it did undermine social expectations. The event destroyed relationships built on trust and people's willingness and ability to pay. The obsession with tulips, referred to as Tulipmania, has captured the public's imagination for generations and has been the subject of several books, including a novel called Tulip Fever. According to popular legend, the tulip craze took hold on all levels of Dutch society in the 1630s. A Scottish journalist, Charles Mackay, in his famous 1641 book Memoirs of Extraordinary Popular Delusions and Madness of Crowds, wrote that the wealthiest merchants to the poorest chimney sweeps jumped into the tulip fray, buying bulbs at high prices and selling for even more. Dutch speculators spent incredible amounts of money on these bulbs, but they only produced flowers for a week. Many companies formed with the sole purpose of trading tulips. However, the trade reached its fever pitch in the late 1630s. Historian Anne Golder says, even though the financial crisis affected very few, the shock of tulip mania was considerable. The tulip bubble was not at all a mania, although a few people did pay very high prices for a very few rare bulbs. Few people did lose a lot of money as well. Instead, the story has been incorporated into public discourse as a moral lesson that greed is bad and chasing prices can be dangerous. It's become a fable about morality in markets and invoked as a reminder that what goes up must go down. Moreover, the church latched onto this tale as a warning against the sins of greed. Now you know your history.